Total loss $16. Total loss $16. That's consistency. That means he was not losing more than 15-16 cents per share. That's his risk. $327 in profits in 15 minutes. Let's look at the screen and see how this beginning trader did that in profits. What you're looking at right now is an Amazon chart. Amazon started the day today with a gap higher at $174 per share, and then immediately it took a tank down. This is a 5-minute chart for Amazon, or AMZN, the ticker number. Started with 174. As you could see it went up slightly, and then bam, it tanked down. Huge red bar, followed by another, followed by another one, followed by another one. 4 bars in a row. However, this new trader, his trading strategy and trading plan says that he has to enter at or near the 5-minute 20 period moving averages. And those two lines, what you see, the green line, this green line right here, that is a 20-minute EMA, or exponential moving average. The blue one is a 20-minute simple moving average. Why do we actually teach our traders to have both of them, the EMA and SMA, at the same time? Because most of the new traders, the beginning traders, they fall into the trap of thinking that support area or support and moving average as a line. Once it gets violated, it's gonna, they go short. This is not right. This gets a lot of people, including myself in my beginning career, that once it passes that line, this is it. Support is done. I'm going short, and bam, it reverses on me, and it destroys my account. So we tell the new traders, you have the 20 moving average, the 20 simple moving average, and the 20 EMA together on your chart, because that makes you realize this is an area of support, not a line of support. That's number one. Number two, the exponential moving average is a lot more sensitive to price action than SMA. So when you see that green line moving away from the blue line, that's an indication that the price is picking up momentum. If the price is stagnant, the price is not moving, those two lines will be almost identical. But once you start seeing that diversion, the green line or the EMA is moving away from the SMA, that means the price movement is picking up, and you should be paying attention to what comes next. Now back to the trade. Let's see what this trader did. His trading plan says he has to enter at or near the support moving averages, support levels, which was at $172. So what he did is he realized he's got three support areas here. The even number, which is 172, it's a natural support. We call that natural. Even numbers are naturals, like 172, 173, 174. These are all naturals. So he had the even number, or he had the solid number 172 as support. He had the EMA and SMA moving averages, 5-minute moving averages, and he also had the prior day close. The prior day close right here is considered a support level. So you got the prior day close at 171.90, or maybe 172. Then he has a 172, the solid number, and he had the EMAs. 3 levels of support that will actually give him higher probability of winning that trade. So he got in with 100 shares first, and you can see that little line. You see that little blue dot right here. That blue dot is an execution for 100 trades at roughly about $172.15, $172.15 per share. So he got in with 100 shares to test the water as soon as he saw green bar moving up. And then And then as the bar took over the red, as you see here, the bar took over the red, he got in was another 100. Now this is good and bad at the same time. Why? The fact that he got in with the second 100 shares in the same 5-minute bar shows me that he's a lot more eager to be in the trade, and that's not good. So in the beginner, and for the beginning traders, we say, listen, do not get in more than 100 shares, one lot in one bar. So he should have waited to the second green bar to form before he opens his second position, or build up his position. However, he was eager to get in, so he jumped in with another 100 shares in the same bar. And what happened is it immediately dropped right after. That's why we tell you wait for the second bar. Immediately dropped right after he got the second lot. He got in, so this is his first execution. This is his second execution for the shares. Now he's got 200 shares of Amazon, one at 172.15, and the other one is one at 172.50. All right, and then he waited. He said my target area is $174 to take one lot. So he waited patiently the first 5 minutes, the second 5 minutes, and the third 5 minutes bar to form, and he just stayed away, stayed out of the trade. He realized there's two things happening at $174 per share. Number one, prior day high, that's resistance. Second thing is 174. 173 is also resistance, but he just got in here, so he wasn't too worried. It was the beginning of the move. But after the $1.50 move, or $2 move, it becomes a resistance. So you have two resistance levels: the prior day close and $174 solid number. So he decided to sell one lot, or he's supposed to sell one lot. What he did is he had a preset order, $174 waiting, and bam, it got triggered on point. The mistake he made is 5 seconds later, so that's 174. And 5 seconds later, he was so eager to get out of the trade, he was so afraid to get out of the trade, to lose to tank. So he got only the second lot, he only got 5 cents more. And that's the second mistake. So the first mistake is he bought in the same bar, and the second mistake is he sold in the same bar, which tells me he needs to work on his patience. He's too eager to get in, he's too eager to get out. He needs to work on his patience. He was very patient here, but once he started the profit that he was looking for, bam, he doesn't want to wait for anymore. This is it. This is my money. I want to take it and run. If he waited one more bar, let me show you what we could have gone more. After he sold at 174 and 174.5, Amazon rallied almost another dollar. One more bar could have been $100 more in that second lot. So if he waited one more bar, once he sold the 174, he could have relaxed. I made some profit. I'm going home with money. Let me push. Let my winning trades run. And then he would have actually sold at almost $174.80 or $175 per share, giving him another $100. So instead of making $327, he could have actually made $427, and that's a great day. For 200 shares, $427 with a risk of 50 cents. 50 cents per share, that's great. That's 4-to-1 right there. He already achieved 4-to-1. He could actually push it to like 6-to-1 for the second lot. So that's mistake number 2. So he did great. He bought. So what? Let's recap what he did right, and let's recap what he did wrong. Number 1, he waited to the support level and he bought 1. Right? That's number 1. That's good. Then he had profit objectives here all the way on the top. That's 174. So he knew when he's getting in, he knew when he's getting out. That's good. He waited patiently here without taking any profits. That's great, right? Now, this is three things he did right. Let's talk about what he did, what he could not wrong, but he could have improved it to increase his probability of making more money today. The first one was the fact that he bought the second lot in the same 5 minute bar. He should have waited for the second bar. He should have got in here, not here. He should got in this bar, not this bar. That's what he should have done. That's number one. Number two is selling. Selling, he already had a preset order that was great. He could have sold one here and he could have waited for the second one to sell the second lot in the second bar, not both of them in the same bar. So pretty much he did great, but he still got more room to get better. Let's look at his P&L and let's see how he did today. As you can see on the bottom, Amazon trade was the most profitable one. 200 shares. It shows 400 shares here because he bought 200 and he sold 200, and then the system, the platform shows you that he traded 400 shares, but it's actually 200 shares bought and sold in the same time. So he made $327 on that particular trade we just explained. But let's see how good of a trader he is. Even though he's a beginning trader, he also traded Cisco before Amazon, and it seems like he's crashed that, because it does seem like it didn't move it his way. He's crashed it. Only $8 profit, almost insignificant. But the beauty of that trader is the fact of his losing trades. Look at his losing trade: $16 in Uber, $16 in UFC, WFC, which is Wells Fargo. Total loss $16. Total loss $16. That's consistency. That means he was not losing more than 15-16 cents per share. That's his risk. Here he's crashed it. I'm not sure. I assume he had the same risk of $15 or 50 cents, whatever it is, but he's crashed that trade. So he was not afraid to get out of a trade that was not really working. And then bam, that's his winning trade. That's how you trade. As a beginning trader, that's how you trade. You have to have consistency in your losses before you have consistency in your gains. This is it. This is it. As long as you get out of your losses according to plan, it's not loss. It is just, the cost of doing business. That's $16. That $16 is the cost of doing business. It's not a loss. The loss is, he could have said, or I have 16 cents risk per share, and that 16 cents then turned into $2 per share because he's too afraid to admit he was wrong and get out of the trade. That's a loss. But if he said, I'm not losing more than 15 cents per share, and he sticks to that, that's not a loss. That's a cost of doing business. Now let's talk about the winning traders, the winning trade. The trade that worked in his advantage, he wasn't so eager to get out of it. He kept it until it hits his profit target, and he executed it perfectly. I would say what he needs to improve is he needs to wait patiently for the second entry. Has to be a second bar. And for the exit, if the trade is going in the favor, then he needs to wait for the second bar to form. This includes this trade review. If you have any trades that you have done and you would like to review it, we would be happy to tell you what went right, what went wrong with your trade. We would love to tell you, how to improve it. Just email us, let us know at daytradingfans@gmail.com, and we will tell us when you bought, when you sold. We'll look at what was your strategy. We'll look at the particular chart and we'll give you an honest feedback. Otherwise, Trade well, and we'll see you next time.
Thank you for watching. Share this with friends and family, and please subscribe.